Hi everyone, we got another big sell here today, and that is exactly what we expected. We talked about it on the Friday, we talked about it on the weekend. As we headed into that max pain finish, we expected markets to kind of hold up as we got the max pain finish. We got a big options expiration that held up markets, and then we did get that continuation lower as we expected, finished down 2.3%, and we were even lower to the lows, momentum swinging back to bearish. But let's take a look at all of the charts and see if we can find some direction for tomorrow. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So in news today, we got Trump out there once again ridiculing Papa Powell, and this is because Papa Powell said that he is not really concerned about the economy. He does not want to move interest rates on the Friday. He did say that the economy was slowing and he was a little bit concerned about that. But right now, he was basically comfortable to be where he's at. And then Trump came out and called him a major loser and that he wants him to lower rates now. And this is exactly why you have people like Jerome Powell leading the Federal Reserve and not people like Donald Trump. I think Jerome Powell has actually done a pretty good job. And if the roles were reversed, I think we would be in a lot worse shape. I think he's doing really, really well, even given the missteps that I think the Fed has had. I think they were a little bit slow to raise rates when we saw consistent inflation. And could they cut here and everything would probably be a little bit better? Maybe, maybe not. I think you could make an argument either way. But this kind of rhetoric coming out of the White House against Jerome Powell, who again, in my opinion, has done a very good job, is absolutely unwarranted. Markets do not like it. And if you were to remove Jerome Powell right now and replace him with somebody who's more friendly to the administration, I don't think that markets would like that either. So again, I think Jerome Powell's probably in the right spot. And it's a little bit frustrating to see this from the White House. There's certainly things that I agree with that they are doing, and this is absolutely not one of them. Moving over to fear and greed, we actually stepped up slightly to a 22 from a 21. I'm not sure how accurate that is, but we stepped up on a day where markets did not like it at all. Interesting to see that. Of course, price continues to create a gap down into the Monday. Strength still very, very low, no movement there. Breadth basically flat from the Friday. Put call ratio elevating once again. Volatility spiking once again from that area of support that we talked about on the Friday session. And then safe haven demand cratering back down. Bonds have been outperforming for a while now. You can see 10% outperformance over the last 20 trading days. It's a good place to be, in my opinion. You can even see it here, junk bonds in greed, right? So you have people buying up these high yielding assets. It's the only thing that is in greed right now. And I do believe that is for a good reason. I think these bonds, even high yield bonds, are probably the better place to be when compared with equities, at least right now. Moving over to the economic calendar, you can see basically nothing here for Monday. Leading index, okay, fairly interesting. Worse than expectations, not good there. Revised down, also not super great. And then looking at Tuesday, basically nothing. Tier note auction, want to see how that's going. Might get a reset on interest rates there. And then we have a little bit of soft data for tomorrow. New home sales. Not expecting anything crazy out of this. Would love to see global services PMI stay above the 50 line. It is expected to. And then manufacturing PMI also would like to see that step above that 50 line. It was on the previous read. Want to see it stay there, but I wouldn't expect it to have a major impact on markets. And really the big one for the week is the core durable numbers on Thursday. Moving over to earnings, basically nothing for today, but tomorrow we start the big earnings season. We've had Netflix already. That was okay, but you got Tesla tomorrow. Absolutely massive. I'm expecting that earnings to be not so great, so it'll be interesting to see what they say about all of the geopolitical things as well as the company. And then you got Verizon, GE Aerospace, Lockheed Martin, 3M, Northrop Grumman, fairly interesting. You got Invesco for UQs traders out there. And then for Wednesday, you got IBM, Philip Morris, AT&T, Thermo Fisher, Services Now, Next Era Energy, Chipotle Mexican Grill, General Dynamics. And then for the Thursday, you got Google, in the after hours, PepsiCo. So some big companies out there over the next couple days. We do have a lot of data, even if it's not super impactful. You do have a couple of heavy hitters in there, but just a lot of data, which can absolutely move markets. Moving over to the charts, looking at the S&Ps, like I said, down 2.38%. In the after hours, we're catching a little bit of a bounce. Interesting, up about $2 there. Momentum, like I said, bearish RSI right at the SMA. So we're going to see if that ends up holding in here or not. Are we going to get the higher low on the RSI? Interesting. interesting could be, it would also be the higher low on price here. We're right at the low from that Thursday, the 10th candle as well. The low there was 509.32, and then the low today was 508.46. So we eclipsed that low, did find some buyers at that area. Interesting. I want to see if that holds up tomorrow. If it does, maybe we get a little bit of a higher low setup in here and we do find a little bit of stabilization. But for right now, for me, this looks like a breakdown, lower high setup, breakdown, lower high setup, and you would expect at least a double bottom here at the trend line. That's still what I'm looking for over the next couple days. Again, that doesn't mean it happens tomorrow by any means. Maybe we go up and fill the gap, get another lower high, and then we get a bigger sell-off. Maybe we wait for some earnings or something like that as a bigger catalyst to bring us back down to these lows here from April. But we are right here at these August lows, getting that test once again, which was a zone that we talked about on the Sunday video as an important area. And throwing those levels on there, you can see critical zone here, the level was 513.27. We overthrew that, and then at the end of the session, big rally candle on volume to get back above that level, 513.27, and then in the after hours, getting a little bit of a spike there. I don't really necessarily believe it. You can see small volume come through in the after hours and see pretty big movements in price just because there's not very many buyers out there, not very many sellers. So just a little bit of money can move markets in the after hours, but it is something. You can see a little bit of something happening here in the after hours. The level there, 517. The next one would be 524.84, and that would bring you basically to the gap fill here. And then looking at the SPY charts here on the daily, this is the big concern, right? So we broke below that 8 EMA, we sold off from that 8 EMA, and based on this chart, we should be going to that lowest band, which right now is 486.15. That's right back to this previous low, and this is going to continue to downtrend here over the next couple days, in my opinion, which could again take us to that lower low potential. And then you got momentum resuming to the downside. Didn't see a ton of volume relative to everything else, which is interesting, but again, this just looks like a very consistent downtrend. Should expect lower lows in my opinion. And then looking at the 4-hour chart, we are officially back into bearish conditions with the close below the level on that 7 o'clock candle. Did see a slight bounce on that second 4-hour, but that 8 EMA is 519.95. Could rally all the way up to that level, reject from there, and get this kind of continuation lower. Interesting to see these ATR bands tightening so much on the 4-hour chart. Wonder if that'll hold up in the next day or two. Moving over to the NASDAQ, similar thesis to what we saw on the previous here. Down 2.47%, even more into this zone here. Took out that low quite a bit. We actually closed basically right on it on the Qs, so it's quite a bit weaker chart. Closing on that low from Thursday. Did go much lower from there. You can see same zone though. We're right at these August lows, the same spot we're at on the SPY charts, waiting to see if that zone goes or not. Are we going to go back to this zone from April, the same zone that we saw on the lows here? Certainly a possibility, something to watch for in terms of levels. And then looking at the price levels, again, we closed right on a level. You can see it here on the hour. Last hour of the day, really, really strong push right to the level. Closed just barely above it, 432.84. Wonder if some buyers got sucked in on the level holding there, and we're seeing that hold in the after hours. Again, after hours price action up about $2. Interesting to see that. You got some trend resistance there as well. 21 EMA, 436.71. Interesting. Again, momentum RSI slightly bullish there. In terms of levels, 446.65 is my next one to the upside. That would take us right back to this September low. But realistically, I believe we are probably headed back towards these lows. Again, a very consistent downtrend with much lower lows and lower highs. And the NASDAQ was the weaker here today versus the SPY chart. So tech leading us down, market leaders leading us lower. I do expect that to continue. Moving over to the Tasty charts here for the Qs. Again, this is a very ominous chart. You can see this very consistent downtrend. Lowest ATR band being the target. That would take us down to 404.59. That would take us right to these wick lows that we saw back here as well, pretty much in that same zone. And this is going to continue to downtrend, still very much bearish conditions, momentum bearish as we saw on the SPY charts. And then looking at that 4-hour chart, back into bearish conditions here, again on the 7 o'clock candle, closed below the trailing stop as we expected. 8 EMA continues to be resistance there, and that is going to be at 438.66 right now. So you have just a couple of dollars of potential there for a touch, and then this will continue to downtrend into the open tomorrow. Again, ATR bands very, very tight, just like we saw on the SPY charts. Is this going to roll over and expand? I think that remains to be seen. Which chart is going to win? Right now on the 4-hour, you can see consolidation happening, but that daily chart still looks very ominous to me. Moving over to the Russell and the Dow, both of these had bad days, 2% and 2.5% respectively. The Russell going right back to that trend line, and then it did catch a little bit of a bounce from there. Interesting. Momentum still stepping to bearish. RSI still stepping to bearish. Dow Industrial, even worse here. Much, much more bearish momentum. RSI breaking down. This clearly looks like we're going to head back to these lows, and if the Dow is going to do it, I would expect everything else is going to do it. In my opinion, either way, not great. Interesting to see the Russell holding up the best out of the four, only down 2%. 2% still a lot, but only down 2% relative to everything else. And on the RSI charts, you can see we're still well above that RSI SMA. So Russell seems like the best place to be. NASDAQ, not so great. Dow, basically the same. SPY somewhere in the middle. Moving over to the Mag 7 here, you can see the Mag 7 down 3.26%. Continuing towards those lows. 230.52 is the level. Momentum bearish, RSI bearish. And again, this is what I was talking about. If the Mag 7 is leading us lower, markets are going to go lower. You just cannot have these 7 companies being so heavily weighted and have the rest of markets able to hold them up. So right now, looks bearish. Clean break below that line. We said 249 was broken. We said 230 was support, and I continue to believe that's probably where we're going, right back to these wick lows here from 5 August. And until we see a support in that area, I just don't believe anything else can happen, right? You just have a consistent downtrend. Moving over to Apple and Microsoft. Apple was down 2%, Microsoft 2.35%. Doesn't look as bad here on Apple, but that is a 2% gap down, just about. To the lows, it was much worse. Almost hit the trend here at 189.31. Didn't quite get there, but we did close below 193.96. Maybe we see a gap down, gap up. That could be interesting. If we do see a gap up, that could give a little bit of bullishness. Similarly here on Microsoft, gap down and fall right to the trend. Touch the trend. We'll see if we get a bounce from that trend or not. Momentum bearish, RSI bearish. Quite a bit weaker here on Microsoft. You're still above the SMA on the RSI here for Apple, so a little bit more hope for Apple. Microsoft clearly looks broken in my opinion. Moving over to Tesla and NVIDIA. Tesla was down almost 6%. It was at one point down 5.75, well below that 232 number. And then we're right at these lows here now. Are we going to get to 214? Probably. Momentum bearish, RSI bearish. The technicals here say that this earnings should be probably not great for Tesla, so just keep that in mind. Probably looks pretty bad. And then looking at NVIDIA, 4.5% lower. 95 is the number, probably going to 90. In my opinion, we could go back to these lows in the 87 area. Continues to look bad. At the very least, go back to this 5 August number, which again is that 90 area. So either way, momentum bearish, RSI bearish on both of these. Moving over to Meta and Broadcom, I really just want to highlight these because Meta is already back on this low from 7 April. So it's already round tripped this entire move. You can see that huge up candle. We had 14.7%. The next candle was down 6%. And then just consistently chipping away at that until we are already back at those lows, back below the level. Seems like we're headed back to these lows here at 454. This stock has been almost cut in half already. We rallied all the way up to 737, 738, and now we're back in the 484 area. What a move here for Meta. And don't forget, it wasn't that long ago Meta was back here in the 90s. Could have got this stock for $90, went to 700, and now we are round tripping a lot of that move, pulling back here into the 400s. So Meta selling off. If that is any indicator of where advertising is going, it's probably not going in a very good direction for the economy. And then you got Broadcom actually hanging in there pretty well, 2.8%, but look at the wick to the lows, didn't quite touch the level, found a little bit of support. Momentum is still fading, but the RSI is above the SMA. Maybe you get a higher low on the RSI there. That would be interesting, but for now, still looks weak at 2.8%. but a little bit better and certainly way better than Meta. Moving over to staples versus discretionaries, a little bit of an everything sell. I was really hoping for this kind of rocket ship continuation on staples, and that just does not seem to be the case. Right now we're holding in the same zone that we've been in for a couple of days now. Momentum stepping down, RSI basically neutral. So this is kind of neutralized consolidation. Discretionary selling 2.67% right to the level 180.10. That's where we said we thought we were going if 185 broke, and sure enough we overthrew that level. The next level is at 174.76 level, which is the low back here. Again, you had that almost 11% update to the 21 EMA. Since then, it has been a big selling move here over the last couple days. Moving over to breadth, this was the fear on breadth. We did get a rejection from this consolidation area on both of these big sells to the level 15.15. Is this going to go lower to the 10.5 area? Maybe. You can see 20 well below the 16 level. Through wick already down to the 8s. Is it going to go to 4.5 again or back to these lows again? Potentially. Momentum back to bearish. Momentum stepping towards bearish. RSI is both bearish. So everything here says we should get continuation lower. We'll keep an eye on it, but it doesn't look great right now. Moving over to the dollar continues to sell here 1% down in a day. Not great at all. You can see straight selling price action from the open all the way until the middle of the session, end of the European session. Then we did get a slight retracement here. Dollar seems to be gaining a little bit of strength early on the Tuesday session. You can see it here, but doesn't look great. As long as this dollar continues to sell, I think this is going to continue to spook markets. So we'll see. We'll see if this holds up eventually. Right now, your support is down at 96.85. Moving over to bonds. Even bonds sold a little bit, not a lot, but a little. J&K was down 0.61, still down in the same area. 93 was your support, and 93.67 was resistance. So waiting to see if this zone ends up holding up or not. So far, it seems to be okay. As long as we're not cratering back towards these levels, should be in good shape. And then looking at TLT, look at that sell, 1.75% right back to the level there, almost at 85.90. Need that level to hold. If this level breaks, that's going to be very concerning for me. That means yields are going up quite a lot, and they're starting to hold in that area. Really want to see TLT hold here and bounce. Want to see yields come in a little bit. If we see TLT continue to sell from here, I think that's going to be a pretty bearish indicator for markets. So we got equities falling, we got bonds falling, we got the dollar falling. All of that together means not good things for the market. Moving over to the VIX, we did get a slight bounce in the VIX. We kind of expected that. We said we had a consolidation here at this cluster of EMAs and trend lines in here. Ended up getting a gap up. Is it going to go back to 44? I think that's probably likely at this point. Momentum stepping back to bullish. At the very least, we should get a retest of the RSI, so we get 1 or 2 more days of spike. Retest that RSI and then maybe get a breakdown from there. That'll be interesting. Either way, though, everything seems to be pointing to the upside here on the VIX. Moving over to my accounts, I managed to make a few dollars on the day. I was short the market pretty much all day up until that last little spike, and I did get stopped out and lost just a little bit of money on there, but nothing too bad. Managed to make $345, and look at that, year to date profit and loss totals $57. Looks like I'm gonna retire tomorrow, probably. Not really, but it has been a slog to get back into bullish territory for the year. Again, major markets absolutely not bullish, and I will take a flat year versus what the broader markets are seeing here. Hopefully we can continue to improve this, but for right now I am happy being up just $57 on the year. And like I said, everything is bearish in my opinion. If we do start to see some levels hold and some levels break to the upside, I have no problems reversing my thesis. I am not married to my thesis in any way, but right now you just can't help but say everything does look a little bearish. Let me know down in the comment section what you think of the markets today. What did you think about Jerome Powell and Donald Trump's comments at each other? Are they bickering like the Real Housewives? What do you think? Otherwise, like and subscribe if you got any value out of this video. Make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.